Have you ever dabbled in online investing platforms? Maybe you saw a friend get lucky with a hot stock, or you were lured in by the promise of easy returns. If you've used a platform like eToro, especially in Australia, then this video might be for you. We're going to dive into a recent lawsuit against eToro and what it means for users who may have lost money trading a specific type of investment product. Now, before we get into the legalese, let's rewind a bit. eToro is a social investing platform. That means you can copy the trades of other users, hoping to ride their coattails to success. It can seem appealing, especially for beginners. But one type of investment product offered by eToro, contracts for difference, CFDs, is particularly risky. CFDs are complex financial instruments that track the price movement of an underlying asset, like a stock or cryptocurrency. The key thing to understand is you don't actually own the asset itself, you're just betting on its price going up or down. This can be risky because CFDs often involve leverage, which magnifies your gains and losses. Basically, you can win big, but you can also lose big, potentially more than you initially invested. That brings us to the lawsuit. Australia's securities regulator, the ASIC, recently sued eToro for alleged breaches of their obligations to protect consumers. The ASIC claims eToro didn't properly assess the risks for everyday investors and basically opened the door to CFD trading for people who shouldn't have been messing with them in the first place. The lawsuit alleges that eToro's target market for CFDs was too broad and their screening process wasn't strict enough, potentially putting a lot of users in harm's way. Here's the thing, this lawsuit is specifically focused on eToro's Australian branch, eToro AUS Capital Limited. If you're an eToro user outside of Australia, this lawsuit likely doesn't apply to you directly. However, it does raise some interesting questions about how eToro operates and the potential risks involved with CFDs in general. Now, this isn't financial advice, and every situation is different. But if you're an Australian eToro user who lost money trading CFDs, especially between October 2021 and June 2023, then this lawsuit might be worth following. There's a chance you could be part of a class action lawsuit down the line, but that's still up in the air. Here's what you can do. Keep an eye on financial news outlets and ASIC's website for updates on the lawsuit. You can also reach out to a lawyer specializing in securities law to discuss your individual situation. Remember, CFDs are complex and can be risky. Always do your own research before investing and never put in more money than you can afford to lose. With that said, thanks for watching, and until next time.